In today's video, we'll be looking at how to read market structure correctly and how to mark it out well so that you end up having a very good win ratio, just like me and my students having good results every week. So as you can see here, market comes down. This is a bearish market structure. Market moves down. It is when we have a body close that I consider a break, okay, not a wick. So in this case here, market traded up, failure to break this low, that makes this high an inducement, okay, meaning market needs to come back to take it. That is the liquidity. Went up again, failed to even clear this one. Market moved down, creating equal highs above here. Market took out the liquidity, okay, and then broke structure. That makes this a strong high. Now, this being a strong high simply means this is the lower high that has been created, and the market broke structure to create what? A lower low. Now, the market move up into the 50% area. As you can see, for me to consider a valid lower high here, price needs to retrace at least 50%. Take note of that. Price needs to retrace at least 50%, okay, before I start looking for a lower high in this case. So as you can see, price went up, filling my condition for a lower high, but in this case it failed to create what? A break of structure. So what does that mean? That implies this is a weak high, meaning it's a liquidity inducement. Then that price needs to take. Price move up, took that liquidity out, and then broke structure. So in this case here, we have our lower high created here. This meets the condition because it is in premium zone for a bearish market, and it also broke structure. Now, this pullback here did not meet the criteria of 50% level. If you take your Fibonacci and you measure it from the top to the bottom, okay, you can see that that price didn't get to the 50% level in the area of what? Discount. So therefore, you will be worried with this high, even though it broke structure. Even if this high broke structure, you have to be worried because it does not fully met the lower high criteria. So as you can see here, price came up here, clearing that liquidity, tapping into area of what? Premium before moving down. Now, secondly, as you can see here, is a stubborn level. This is a stubborn level here. And I said in my previous video on liquidity inducement that when you see a stubborn level, that the first pullback is always what? Liquidity inducement. So a lot of people will be deciding to sell in here just because it broke structure. But in this case, it didn't meet up the rules, okay, that we need to use in order to make this what? A valid lower high. So when they trade in here, normally you might see some few reaction, but price will eventually take that high into the true premium areas, then broke structure. As you can see here now, this is not our lower high, this is our lower high because it took liquidity and also broke structure, okay. And you see price went up to the 50% level, broke structure. That is also good. And then we continue, okay, and we are going to look at the bullish scenario as well. So you can see the bullish scenario here. We have market going up here. Now this high took out liquidity, market broke structure, okay, pull back. This met the rules for a lower high because in this case we are looking at what? Bullish pricing, but it failed to break structure, okay. The moment you see that the high did not break structure, you need to pause on your directional bias, meaning whatever you're looking at as a bullish move before needs to be re-examined because this low has failed to break structure. So that makes it a target that liquidity market will want to take out that low, okay, into a better pricing and then move. And in this case, price broke structure, breaking areas of what? Demand, doing that, okay. Now this low here did not fulfill the 50% level if you take your Fibonacci and you put in there, it did not fulfill it, price needs to come into this before I start knowing that this move will continue going. But if it does not tap into the 50% level and even broke structure, I will be worried when price is coming towards this side, because I know from experience that most of the time we will get a loss in here. Okay, because price is actually coming after this, and now most people will tell you this is a strong high, a strong low, just because it broke structure. No, it will be a target. Now, number two, why this is an inducement is because this level was a stubborn supply zone that was broken. Now, from my rules that I keep teaching on this channel, the first pullback is an inducement. So this is a liquidity that the market needs to take before continuing the bullish move. And in this case, market came down, tapped into your POI in a discount zone, and then proceeded. Now it moved up, but failure to break structure. Now with this pullback, if this market keep coming back, I will not be interested here, because I know that it failed to break the structure. Okay, it fails to continue the bullish push. So definitely I might be interested in additional POI somewhere at the point of what? Origin in here. Okay, but as you can see, price retraced a little bit and then broke structure. Okay, price broke structure. Now between this and this, which one is your lower, is your higher low? This is your higher low, because this is in the area of what? Discount from this leg. Okay, from this leg, this area of discount. Okay, now does it mean that you can't trade in here? Sure, you can, but having at the back of your mind that this is not a high probability what? Buy zone. Okay, you can decide to scalp in here, okay, or look for a target within the lower time frame to peak before price comes back. Now as you can see, price came back, respected here a little, went up. The moment price is coming back here, you see that that has created what? Liquidity. Now this is what we call liquidity engineering. The market printing liquidity, inducing buyers and sellers to be involved in the market, because without liquidity we will not have a functional market. So price came down here, failure to break structure. That should tell you that this low is a weak low and it needs to be taken. Alongside this, move into area of what? Discount. In this case, we'll be measuring from here, from the higher low. You can see this came into area of discount. Okay, then from there you can what? Decide to take the trade. Now I'm going to show you this on the chart for a bearish scenario, because there won't be enough time for me to show both bullish and bearish scenario. So we're going to start from here, okay, downside, and then apply what we have just learned in there. Now you can see that the discount level is from here to here. Market was moving down. Okay, this is the structure. This is the structure it needs to break. Okay, price was moving down, eventually broke this structure. This pullback up here didn't get to the 50% level. So in my mind, I will know that that level is not a strong area for a lower high to be formed. Okay, you can see price went low, decided to take that high. Now this high also is not within that premium zone, went lower, failure to create structure, and in that case the market keep building liquidity. Okay, then eventually taps in here, okay, into the premium level, into a kind of point of interest. We are not interested in the point of interest. If you want to know more on the point of interest, you can check my videos. I did series of video on that. Now from there, price went down, traded down, breaking what? Structure. Broke structure to the downside. Yeah. Now so you can track your movement in price. Okay, eventually what happened to price? market broke structure, yeah, we won't be interested in all of these because they are not in premium zone from here. So this is our high, this is our low for now. So now as price move up, failing to get into the premium zone, the broke structure, most people will be looking at this area for a sell. There's nothing wrong there. Okay, we all see the market differently. But however, if I'm taking a sell in here, I'll be scalping because I know that the price hasn't gotten to area of premium before moving to the downside. Okay, so I'll be very careful and knowing my targets within the lower time frame. So from here, you can see the market came down, then pushed higher, creating this low. So you adjust your Fibonacci to this low, from this high to this low. Now from this low, it traded into area of what? Premium, from the 50% level, traded to area of premium. Then from there, you can see a break to the downside. Now you adjust your Fibonacci then, okay? This is where the break occurred here. Market came down. First of all, market came down, traded up because this hasn't broken structure yet. So whatever high that was in here will be taken. Eventually those high were taken in here and then finally broke structure. Now the question is this your higher, your lower high, or this? I will stick to this. This is the origin of the move. This is the origin of the move. So this is my impulse leg, not from year to year. Okay, so in case price comes to this point in the future, yeah, I'll be very wary. I'll be wary. This won't be a high probability sell zone for me, just my rule. Okay, but however, I will take a sell from there because of this extension in there, but I'll be very careful in my exit point. So now in this case, price came up, traded into area of what? Premium. After clearing the liquidity up here, market went up into this area of premium, then broke structure by taking out all this liquidity that has been built up. If you are selling here, this will be your target in here. So market went up into area of discount, broke structure. Now as it broke structure, you have a new high. This is the high, and this is the low. The high, and we have the low. Now look at something here. When market broke structure here, you can see that it pulled back but not into the 50% level. So that should tell you those highs will be a form of what? Inducement. Market came down, take out that high, came down, failure to break the structure. Market moved higher again, move down, failure to break structure. Definitely this high should be going. Okay, this high should go. Market move down, breaking structure. In this case, this is not a break of structure because we haven't gotten to our premium region yet. Now this will be applicable on higher time frame from 4 hours, okay, not on a very lower time frame. Okay, market didn't come to the premium level yet. Then in this case, it traded into the premium level, clearing out all this liquidity. Then from here, it broke structure. So we have another break of structure here currently, and then you adjust your Fibonacci here. I am not using Fibonacci to make trades, okay, just to help me figure out which high is the true lower low, lower high, or higher high, and the rest of that. So currently we are here on Euro USD. Okay, price has already tapped into the premium level. Now because it's in the premium level doesn't mean we should be selling, because you can see this high hasn't broken structure. So that serves as what? A form of what? Liquidity. Price may seek this into this region here. Okay, and this was very difficult trade to look at. And you can see if we go to the 4 hour, we have started building what? A form of structure here. So I will not be surprised if price take this high. Okay, this then creating what? A form of equal high here. The price may tap into this area and then move to the downside. So this is how you can read the market structure using liquidity, liquidity inducement, liquidity engineering, and premium and discount level. I hope this makes sense. I will see you in this video.